what does a day look like in an ECM team within investment banking? Woo! Firstly, I want to say thanks for all those who are coming back to the channel, and if you're new to this, hello. Just a quick background about myself. I have worked in investment banking for a few years, so I'm just trying to put people on. I know there are a few channels that do this, but I like to try and keep it as unfiltered as I can. So if you're liking the content, please do subscribe, please like, please comment, please share, all that good stuff. I'm just trying to get this as big as I can, and we've got loads and loads of ideas on the way. Anyway, let's get right into this video. So I worked in a mid-market firm, and my role was essentially ECM / corporate broking / public M&A. Now, where does this sit in sort of the investment banking division? So first of all, it is within IBD. It is a product team rather than a sector team. So it is on the private side of the Chinese wall. All IBD teams are anyway. So yeah, so on the other side of the wall is your sales and trading teams. You have your equity research, you have all your middle office teams and all that stuff. They're on the public side. We are on the private side. So we have inside information. Now, people always ask, oh, what sectors did you cover? So initially when I came into Stifel where I worked, the setup was that there were essentially 3 ECM teams. One was just focused on energy and natural resources, and the other team was solely focused on real estate. So my team was everything else. Although I did actually have a real estate client and I got involved in some real estate stuff. So that was actually kind of cool for me. So I basically did loads. I was sector agnostic, and that's actually what appealed to me to actually go into the job. I wanted to try and keep it options open in terms of what I'd like to maybe specialize in later down the line. Typically, the sort of areas and sectors that I worked alongside most were with FIG, business services, support services, healthcare, consumer, did a bit of like legal sort of companies. And yeah, I think that was majority of the work that I did. That covers everything, I think. But yeah, so that was sort of my main remit. And yeah, we essentially sit in the middle of the sector teams. You have your sector teams which will just focus on like private M&A stuff, which I'll get to at the bottom of this video, but we would just focus on public stuff. So when I say public companies, I'm talking about the ones that are listed. Primarily, we were only looking at UK companies or ones that were maybe dual listed in the UK. So there might have been US companies dual listed here. So anything that is floating on the London Stock Exchange, whether that's in the AIM market or it's either on the main market. Okay, so that is where we sort of sat. The way that we worked with the sector teams was that if there was a client or a target that was a public company, so say if like, I don't know, say if we were looking at a P2P, that a P2P is a public to private. So a company is public and we're working and there's a PE company who are coming in and they want to take that company private. We would then get involved with the sector team on that because from a regulation perspective, that is our expertise in terms of takeover code and an AIM regulation and listing rules and all that stuff. So that sort of expertise sits within our team, and that's why we get dragged into that transaction. So that was quite good for me because I think I was like, I want to get involved with as many different teams as I can. So that's why I found that quite appealing. Now, it also means that you have to become like a jack of all trades, master of none, which means that your sort of knowledge level is very broad, but you're not going to go deep into certain things. So where we sat, for instance, like I said, we were almost seen as like a resource for sector teams. So we had our own things. However, like for instance, we had public clients, which was part of the corporate broking side of the role. Let me just break it down into sort of the 3 different segments then, that what I did. So first of all, let's talk about corporate broking first. What is corporate broking? Corporate broking is where there is a listed company and they essentially need advice on certain matters. So for instance, like I've mentioned, they need advice with regulations, with different codes, how they're meant to do things to ensure that they are staying within the realms of the rules set out by the London Stock Exchange and the FCA and whatnot. They appoint a corporate broker, so that was essentially the bank that I was at, and they come to us with any query any time of the day all year round. Now we have to know our shit, because in the public markets the difference is everything is super sensitive. If there is something deemed as inside information, it needs to be released very, very quickly to the market. So you could literally get a call on a Sunday night while you're on holiday, even like throughout the holidays and Christmas, you get a call, something has happened at the company and it's deemed as inside information. We would then have to deliberate, do we think it's inside information? Is it sensitive? Is it price sensitive? If it is price sensitive, this will need to be released to the market as soon as possible. So then we have to read through the announcement, everything, approve that, and then it will get released to the market. So that is a corporate broking element. They can literally come to you with absolutely any query. They can just be like, why is our share price moving to I don't know, why is it moving up today? Why did it move down today? Some clients are less sort of intensive than others. So with some clients, they'll do a lot of in-house stuff. If it's generally a bigger client, they have their own IR team. A lot of their IR team will do a lot of setting up of like meetings or doing a lot of board packs and stuff. But I've been on clients where we had a massive input in terms of doing board reports. So we had to like gather all the information, what's happened to the share price, all this stuff, what shareholders thinking, all that thing. So we'd work with the sales and trading team and get some feedback from them, from investors on the buy side, to then feed it back to the company. So you're doing a lot of that kind of stuff. They might ask for a valuation if they're looking to do, I don't know, they're looking to maybe do like a share buyback scheme or something like that. You have to do all that stuff, and yeah, we have to basically put it through our system, and then we can get a fee on the back of that. The fees from a corporate broking perspective aren't a lot, so you typically get a retainer for the smaller fees. The larger companies, a lot of them won't, like FTSE 100 won't give a retainer out. So the way that you're going to make money from them is getting onto deals, which I'll go on to in a minute. But yeah, so the fees for corporate broking aren't a lot, but you're expected to essentially just be their advisor throughout the whole time. Now, if you're working on AIM listed companies, there's another role that you can have called Nomad. So a nominated advisor is essentially someone who knows all the AIM rules, and basically there will be like a specific person in your company who is like a QE, a qualified executive, and they can play the role of a nomad for a client. So anything, in terms of regulation and stuff, they're the person that has to have the final sign off. So it's a bit of a pain in the ass, to be honest, because I worked with a nomad who I felt bad for him. Like, yeah, I mean, when he's on holiday, he's constantly getting calls all the time to approve certain things and stuff. It just must be annoying. But yeah, that's essentially sort of the broken mandate. It's just, and you'll have to sort of go to the board meetings a lot of the time and present certain ideas if they've got any ideas, like I mentioned, the share buyback and any things like that, and give feedback in terms of in literal different acquisitions and things like that as well. Now, so that's corporate broking covered. Now ECM. So ECM feeds off that to an extent. ECM is equity capital markets. So it's a lot of it I'm going to talk about is like fundraising. So if you have a public company, you can raise funds through equity issuance. So this could be either through an IPO, so it could be a private company looking to IPO, and then we have to think about how they're going to price the IPO, and we have to also get the demand in from the buy side, so people that are actually going to give money to buy equity into this company. Now, if the company is already public and they need to raise more money, they can do a follow-on offering, so they can just issue more equity, but then we have to deem a price reasonable, where basically it's a huge negotiation, because what happens is obviously the company wants to give away the least amount of equity as they can, so they're going to price their shares up as high as they can for this deal. But then the buy side are going to be like, well, we want more equity, so they'll want a lower price, and typically it's priced at a discount to what the price is currently traded at. That's how you kind of get the institutional buy-in. Now, honestly, this can go back and forth loads. Like you basically set different limits. So I've had ticket orders where they're like, if it's at this price, we'll invest 20 million. If it's at this price, we'll invest 10 million. If it's at this price, we'll invest 30 million. And yeah, so it's a literal back and forth. I went through a 6 month, which is massive, because usually these can take like a couple of weeks generally from start to finish. I went through like a 6 month process last year, which was hell. And I basically led the whole thing. Yeah, so it can actually be horrendous, to be honest with you, just to get the demand. Why do companies want to raise money? So for IPOs, a lot of the time, it's an exit for a founder. Maybe they're just looking, they're like, you know what, I'll retain a little bit of interest, but I just want my money now. A lot of the times, it can also be for growth. So companies are like, well, we just need more money and we need it to be liquid as well. So there are options for us to buy back some shares at certain times. That can be quite an appealing thing to do. And also having if you IPO as well, you can, because you're regulated, you have to abide by a lot more regulations. It can actually help you on the debt side as well. So when you're trying to get loans or RCS, revolving credit facilities, a bank can look at that and be like, hey, okay, cool, it is actually listed, blah, blah, blah. So gives more sort of confidence to them that, you know, like that this company is going to be able to repay their loan. So that's the reason as to why generally people go for the market. So yeah, that's basically ECM covered. Now, just before I go on to the next, I want to say also, why do people want to raise money in follow-on offerings? So a lot of the time this could be because they are like, okay, we have an acquisition we want to make, and yeah, we need to raise some money for that. Yeah, sometimes that is the case. Sometimes it can be just for a pipeline of acquisitions. So you're being quite vague rather than a specific acquisition. You might say, you know what, we've got a few acquisitions we're looking at and we want to raise money just in case it's the right time to buy them. Another one could be working capital purposes, just in terms of, our cash flow is going to run low and we just need to have a carry on kind of thing. So there are different purposes as to why companies raise money. Now, the last one, public M&A. So public M&A is subject to the Takeover Code in the UK. So that means that it's a lot more structured in the way that things have to be done. We typically will work with the private M&A guys on these kind of deals because they're the ones who are better at valuation and stuff. But I've been on public M&A deals where it's literally just our team as well. So that's why your modeling does have to be on point. And essentially there are different roles that you can play on a public M&A deal. So the financial advisor are the ones they're going to get the bulk of the fee. If you're a financial advisor, especially if you're sole financial advisor, you can get a junior role such as like a junior financial advisor, or the worst one is if you're a corporate broker and you don't win the mandate for that project, so you end up just being like basically just a broker and you kind of just have to do like some admin-y kind of stuff, which is kind of crap, I'll be honest with you. So yeah, that's public M&A, and the fees are a lot bigger on public M&A. The only thing is public M&A, because of how structured it is and everything, it doesn't happen a lot. A lot of it is happening now because a lot of companies are seeing less value in the UK markets and in terms of being listed. So there are like PE firms and stuff that are just acquiring some companies, like companies going public to private, and we can get involved with that. So we can work with our sponsors team on that stuff and the private M&A guys as well in order to facilitate them deals. And that's where you can generally make decent fees. With the ECM stuff, you can also make decent fees as well. So ECM, I always pitch this, and like, so for instance, if you had a year where like the markets were booming and people were literally just looking to raise money and the demand was there to raise money, you can make a lot of money from just raising money in the markets, and the process is so much simpler and quicker. From start to finish, you can have an ECM deal like raising, 200 million of equity. That whole process can be done within the space of 2 weeks, maybe 3 weeks maximum, like if it's an efficient process. And you can get a fee of you can charge 6% on 6 to 9% I've seen sometimes on the final fee. So you could get 6% of 200 million, which is £12 million fee, right? So they're the kind of fees you can get in ECM, and for 2-3 weeks work, I think that's quality compared to an M&A, which you can still get good fees from that, but it's a lot more strung out. There's a lot more work involved, and yeah. So you have that, and then with public M&A, you can also get really good fees as well. It's akin to private M&A. So yeah, the fees can be really good. The only difference is that it's a shorter timeline, which means the work that you do is going to be a lot more intense, but it's for a short period of time. So if you had loads of them stacked up, you could actually make very good money on them fees. But yeah, that's essentially the three things that I was involved in. Now, my typical day, people always talk about typical days, and I'm going to do a day in my life properly when I get some time to do it. Like taking my camera around and stuff like that. I think, yeah, that'd be kind of cool. But just to give you sort of a quick rundown. So your typical starting hours, if you're working in public market stuff like I was, I had to be in before 8 a.m. I will not lie to you, I was always late. So I was always there for like 8:30. But you're meant to be in for 8 a.m. and that is because the markets in the UK open at 8 a.m. This is like every day, right? Now, if you are part of a project or you know something is releasing on one of your clients or your targets that's really important, you're going to probably have to be online before 7 a.m. because basically there's a system called RNS, which is sort of like the announcement portal. It's where all public companies make their announcements in the UK. And if there are important announcements, they go out at 7 a.m. So like you have to be ready to respond to any queries that are going to come from investors or from your clients or whatever that are coming through. Now, a lot of this will be supplemented with your sales and trading guys. They should be there. I mean, they have to be there. This is like, I'm just talking about like worst case scenarios. You'll have to do this, or if like you're in a project. But yeah, so that's how my day would start. I'd look at emails as soon as I wake up, I'll be real with you. So before I get into work, I'll look at my emails. But yeah, say if I get in at 8 a.m. on a typical day, my first hour is basically just smashing through some emails. A lot of these emails might be giving an overview of, like, so for instance, if you have a client, you'll give an overview of their competitors, if they release anything in the day. So you just screen the market, see what's happened, see what news has come out. I'd then distill it into an email and try to send it out before 9 a.m. to our client, typically before that as well, and see if we've got any research that has been written on it overnight on them clients. Attach that research, boom, send it over to the client to just give them insight into what's happening, why their share price might be moving, because share price doesn't move just because you've done something. It can be obviously macro related as well, so anything within the industry can sort of have an effect on your share price. So that is what I would do first, and that can literally take sometimes up to like 9:30. And then we typically have a Monday morning meeting. I'm just talking about Monday, so a morning meeting at 9:30 or 10, where everyone basically just go around the room, talk about what you're working on for that week, talk about different clients. Sometimes later in the week you might have this might be, instead of like a morning meeting thing, it might be a target list where you go through a bunch of targets you're after and where we're at with those. Are they realistic? Do we drop them off? Do we intensify? Blah blah blah. So yeah, that can take about an hour, just chatting about that kind of stuff. And then typically you go back to your desk and you'll have multiple things on. Now, this is where I want to sort of talk about projects, right? So you can have projects and pitches. That's where I like to sort of put it. So pitches where you're pitching for clients or you're pitching for projects. So if you're pitching for a client, it could be like, I don't know, a lot of companies constantly rotate their brokers, for instance, every 2 to 3 years. And when that process happens, they run a formal process and they invite you. Your MD will get an email saying, hey, we want to invite you to a pitch process. It'll be in like 2 weeks time. These are the key things we're looking for. Boom, 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 boom. Like an RFP. So now doing a pitch can be annoying, but I like it personally, especially if you win it. People always say, like, how long are these pitches? How much work does it take? It takes a lot of work to do these, but the length of it depends on your MD. Every MD will like things differently, and it also depends on the relationship that your MD has with the company already, or if it's a new company as well. So I've worked on pitches where I think the shortest pitch I've done is like 40 pages on PowerPoint. I've also done pitches where there were 120 pages on PowerPoint. And sometimes, certain MDs like one thing, certain MDs like another thing. I worked with one director, for instance, on a pitch where he likes about three slides on one page. That's the amount of content he likes. And that one's like over 100 pages. So it varies. It varies massively. Now, as part of this pitch, a lot of it is sort of admin-y kind of stuff. About 10 to 15 slides of it is just going to be your company stuff anyway. So they're kind of like bulk slides that you can just get from elsewhere and just refresh them. But there are some slides that you are going to have to do. Like I always say about 70% of the decks that you do for pitches are, at least 70% are things that you're going to have to come up with from scratch. So you're going to have to do a lot of research into the company, looking at the history, looking at targets, what the company has set out, looking at loads of their reports that they've done recently in terms of financial reports and things like that. Look at their investment case, look at research online, what you can find. And basically all that culminates into a massive pitch. And I always talk about this because I find it hilarious. So essentially what you're trying to do, you're just trying to feed the ego of the management, right? That's how you win clients, essentially. You're a salesman. And I remember one of my MDs, my favorite MD, used to get me to do this valuation. And it's essentially like a waterfall, and you start with their current market cap, and then basically anything that they've mentioned in their targets or anything like that, and we account for maybe if they've done an acquisition in the last year, we might say, oh, you do a similar acquisition in like 3 years time. Basically what we do like a market cap build, and we'll get them to like some stupid number, which most like probably guaranteed never to actually happen within 3 to 5 years. But like, it's so funny because once I remember we did a company where I think the market cap's like 400 million, and we said like, yeah, in 3 to 5 years time you'll get to like 4 billion. To be honest, like but the thing is, you can't just like stick numbers on there. You actually have to have drivers, and you have to stipulate what drivers you've used and why we think that this is a plausible valuation. And yeah, so it's a lot of fun stuff like that, if that's fun. But I mean, to us, I found it quite fun. And yeah, like so that's the sort of the pitch side. So a lot of the time there's going to be a lot of iterations of this. If you're working with juniors, you're working with seniors, you're going to have to be reviewing, get feedback, review, get feedback. And yeah, so that's sort of the pitch process. Now the project stuff, so like I've mentioned, it can be like public M&A stuff. It could be, so you could be working on a public M&A. It could be the ECM stuff, so raising money. It could be a share buyback thing, which, to be honest, it's mostly sales and trading do that, so that's not really a big thing on our side. It could be a move up from an AIM listing to a main market listing, which I was in the process of doing that. So there are lots of different projects that you can get involved in, and so the variety is endless essentially. Anyway, so in terms of my day-to-day, I would go back to my desk, go do this, might have some ad hoc client meetings as well. So ad hoc client meetings can literally just be catch-ups with, I don't know, a recent roadshow that we organise. So a roadshow is essentially where a company, usually after results or something material has happened, investors will be like, oh, we'd love to see them, and dig into like have one-on-one meetings with them, dig into their financials, dig into how they're thinking about everything. So what we would do, we'd work with our sales team across UK, Europe and in the US and say, hey, we've got this client, can you see if there are any interested parties who, let's say if we set up a day with them in Europe, how many meetings can we get for them? So we'll typically do that, and so then the client will go out, have a few meetings, and then we'll feed back those comments. And sometimes this is done over a meeting, for instance. So yeah, it's just certain catch-ups like that. We used to have certain touch points with a few clients just in terms of how everything's going, what we can do to help them more, and everything's like that. So I think that's really important, to be honest with you. So that can be part of your day. You have some internal meetings maybe as well, some catch-ups, and before you know it, it's like 7 p.m. and that's when you can get your dinner. So I always got my dinner. And then yeah, sometimes what I used to do, like in my last year or so, I used to go home at like 8ish, because my work, it went down a little bit in terms of like important stuff I had to do, and there wasn't as much, but I still had to do things, and I was like, I'll just do it from home instead. But in my first couple of years, I was working in the office till about 11:30 on an average day. Sometimes that would go to the early morning. So yeah, the hours, like I always say, like a good time to finish is good for you is 8 p.m. Average is like 10. Bad is where it's going to like 2 a.m. That's how I would define it. And I think now is a good time to just talk about the difference between private M&A and public M&A. So first one is hours, right? So the private M&A guys, I always like to say that from people, especially moving from audit, I feel like you'll understand private M&A workflow better, because with private M&A, it's a bit more stretched out and you have certain milestones to hit, and you know when you have to hit them. It's like, you know, like I've got time to do this, I can work towards this. Public M&A is a lot more on the ball, and like you have to be on it sometimes. Like it's so intense. It can go from absolute nothing to oh my days. So I always talk about how it's just a lot more intense, but generally the hours are better because, like I said, I've just mentioned the hours for my sort of team. The private M&A guys, they come in later, so we have to be, like I said, on the desk at 8 a.m. The private M&A guys sometimes come in at like 9:30, 10, but they know that they're going to be working till 1 a.m. like every day and do a lot of weekends. Like I rarely did weekends. Sometimes I had to. The private M&A guys typically did more. Yeah, they typically did more weekends than I did. So yeah, that's one big difference. I think another thing is they do a lot more sort of like they will be on projects and stuff, but I feel like because they do, I'll go into another video on there sort of what they do, but in terms of the materials that they produce, ours are a lot more standard, I would say. They try to like make them look all glossy and nice because of the end client that they're pitching to, whereas like corporates like that we work with don't care that much about presentation as much as like a private company does. So that's what the main difference is. And yeah, I think I'm going to leave it there because I'd love to just go into loads of different teams in separate videos. I think that would be kind of cool. But essentially, yeah, that is kind of what I do. And yeah, it's not for everyone. Like I said, it's more, the thing is with public, you have to be 24/7 available essentially. That doesn't mean you're working 24/7, but like if something happens, so much like shit hits the fan, you've got to be available, whether you're on holiday or whatever. And I just didn't like that, I'll be honest with you. But that is the nature of the beast. So yeah, please let me know what you want to see from us on this channel. Keep dropping comments. I'm loving that people are actually finding this useful. Trying to grow this channel as quick as I can. Starting a podcast as well, which is coming out in July, where I'm going to get a load of different people from different careers, and really so people can understand, you know, what they did to get into those careers, and hopefully it'll help some people here decide what they actually want to do with their lives. And yeah, just trying to focus on everything now. I'm really trying to take this to the moon. So any support would be massive for me. Yeah, honestly, like I'm just trying to get my views up. I'm trying to do everything I can to then hopefully transition into this full time so I can help more people. That is the ultimate goal. But if you do need any one-to-one sort of chats, just DM me. And if it's something that I can answer straight away, I will. If not, I'll suggest a call with me on my Discord. So yeah, please join the Discord. I'm going to be offering some cool resources on there fairly soon in the next couple of months. So please sign up to that as well. And yeah, just follow me on all platforms. My links are in the bio. And yeah, everyone just have a blessed day. And that's all I can say. But yeah, remember to subscribe, share, like, comment. I'm really bad at this stuff. But yeah, peace.